Okay guys, and welcome to today's video. I'm excited to have you all right here. So in today's video we're going to be discussing market efficiency paradigm. So I'm going to be going over the walkthrough on what the dollar has done and what the dollar is doing and what the dollar will likely do in the future. So without further ado, let's just get right into it. And I believe you'll be able to grab one or two things here to be able to enhance your trading and also benefit you and your journey to consistency. So in the previous video I uploaded on the market makers liquidity saga, we outlined our objectives for the dollar. We said we want to see the dollar come and fill in this particular imbalance right here. You understand? And also from the monthly time frame, we said also we want to see price trade into this old monthly high right here. You understand? This particular old monthly high. And looking all the way even from the weekly time frame, we can see how price respected that particular area, which is this old monthly high right here. So let me mark that out in price. This particular old monthly high here, so our price respected it. If you drop down also to the daily chart, you can see how price traded into it with great precision, and immediately we saw a quick response in price higher. We also drop into the 4-hour time frame. We can see it also with clear precision. On this particular 4-hour candle, we saw our price traded into that particular area, the 105.22 level, and immediately the next candle printed out bullish. You understand, giving us a quick response in price higher. So this particular piece of price action, or this particular delivery in price, is what you can view and term market efficiency paradigm. The way price is able to deliver on the buy side and on the sell side with quick response, you understand, telling us, okay, at this particular area there's liquidity here, and their willingness for the market participant, which is the market makers, to start booking higher prices, to start seeking higher prices. You understand? So the ability for the market makers to move price from the buy side to the sell side is known as market efficiency paradigm. Like if you look at here, this was an inefficiency in the market. This particular imbalance was an inefficiency in the market. Price traded only one side of the market, which is to the buy side. So on the other hand, they had to come back and fill in this particular gap they left in price in terms of the imbalance. And also if you look at it clearly, it can also pass as a fair value gap, which is 1, 2, 3 candles. So this low didn't get to this particular high of this candle right here. I got a question about this particular thing. So this, I'm going to be explaining the difference between the imbalance and also the fair value gap. Looking at the candles together, which is 1, 2, 3, they all, it is a one-sided candle. You understand? Because if you look at on the weekly time frame, you can see it's just one straight candle. So this is an imbalance. You understand? But if you look precisely, you understand, if you look in great details, you can also see a fair value gap inside an imbalance. So I believe I'm answering the question of somebody with this particular explanation. Why is there an imbalance? Why is there also a fair value gap inside an imbalance? Because you have 1, 2, and 3 candle, and this particular low of this candle didn't get to this particular high. So this is a fair value gap finding itself or happening inside an imbalance. You understand? So you can most of the time see a fair value gap, you understand, happen inside an imbalance. Also, if you look right here too, we also have a fair value gap, but this is also an imbalance because this is 1, 2, and 3 candle. This is a low, and this is what the high of this particular candle. What happened? You saw price traded on this particular candle coming where to fill what? Below this fair value gap. You understand? But price didn't stop at the fair value gap. Price traded also into the imbalance also. You get, and immediately from this particular point, we saw a quick response in price higher. You understand? And also if you look right here, also when price traded into this fair value gap right here, this particular low of this fair value gap right here on this particular candle, you notice that from this point, just for a short moment, we saw a quick response in price was higher, telling us that we have entered an area of liquidity which is known as a fair value gap within an imbalance. So I believe I was able to just create a little clarity as regard the question I got about whether what's the difference between the fair value gap and the imbalance. So I believe I've been able to do justice rather to that particular question in this particular piece of price action. So without further ado, let's just continue with the purpose of this video. So there was an inefficiency in price right here, which was as a result of this particular imbalance we had right here, and price traded one side of the market to the upside and later on coming to clear it, fill that particular in, you understand. But price also traded for lower prices, which is the old monthly high. You can see clearly right here on the daily time frame, this is the old monthly high that price came into, which is the 105.22 level, you understand. So and immediately we saw what a quick response in price was higher, you understand, telling us that this particular area of liquidity is very significant. And mind you, we're talking about a old monthly high. So in other words, our area of liquidity is all the way from the monthly time frame, you understand. So we have a lot of backing telling us that we want to start seeing higher prices. Mind you, on the previous video I made, I analyzed why we had a wish plus on the dollar. If I bring a period separator all the way from last 2 weeks, which was this week here and the last week also, even at the release of FOMC, I told you the reason why we still saw bearish prices despite dollar now looking attractive, and instead of investors to start pushing the dollar prices higher, the market makers to start booking higher prices, instead they decided to continue selling. Why? Because I told you that they already had set their objective, and their objective was going to be that old monthly high. I said that in that previous video, you understand. I said the reason why they are going to keep taking price lower is because already they have set their objective even before the dollar became attractive, you understand. They've already agreed that they were going to take price down to that level, and you can see that happen right here in price traded into that old monthly on this particular 4-hour candle, and the next 4-hour candle you can see the quick response in price, you understand. So that is market efficiency paradigm. Markets will have to be efficient. So despite the interest rate, despite how attractive the dollar may look, how attractive the pounds may look, once the market has an inefficiency, the market will want to deliver to that inefficiency to make that area efficient, you understand. Why? Because they don't want to leave any gap, they don't want to leave any money on the table, you understand. I believe that is clear, you understand. Don't worry, I'll make subsequent video about the inefficiencies for you to be able to understand that. But because of time on this video, I just want us to see what the dollar is doing right now and what to start expecting going forward. So if you watch the institutional order flow video I outlined right there, let me remove this. I outlined recently on this channel. I told you want to see price trade into an area of liquidity, and in this case we've seen price trade into this old monthly high right here. So now here becomes our point of origin, and we say immediately after that happened, we want to see a quick response in price to the new direction. And now in this case the new direction is the upside, and we can see the impulsive price move higher in the new direction. And now we said, okay, we want to see this impulsive price move towards take out a swing high. Is that not so? But in this case, on the daily time frame, the swing high is right here, and this impulsive price move higher has not gotten to that particular swing high. But if we drop to the 4-hour time frame, we can see that we already have a swing high already taken out on the 4 hours right here. You understand? This is the swing high. For clarity, this is a swing high right here. So we have seen price with this impulsive price move from this point of origin. We have seen price come into what this particular swing high on the 4 hours. This is the one on the daily time frame right here. You understand? This is the one on the 4 hours. You understand? So you mind, I told you on that video, I said there are variations. You understand? There are variations on ways you can look at this particular area for better understanding rather institutional order flow. You understand? There are variations, and that variations is bent on the time frame. You understand? If I'm looking from the 4-hour time frame, my institutional order flow is already bullish. If I am looking from the daily time frame, my institutional order flow is yet to be bullish. Though there have been a point of origin, yes, they've been an impulsive price move, but it is still yet to be bullish. But from the 4-hour standpoint, my institutional order flow is already bullish. So let's just talk in terms of the dollar now being bullish already. You understand? We said, okay, once we already have a point of origin right here, we want to see an impulsive price move higher, taking what is swing high, which is what we see happen on this particular candle right here. And now immediately this we see our swing high being taken. And what do we want to see? We want to see a retracement, and that's what's happening currently in the marketplace. At the time of recording, this is 4th of August 2022 on a Thursday. You understand? So we're seeing price trade lower. You understand? So where are we expecting price to come into? We want to see price come into this series of up close candle, which will serve as an imbalance, or we want to see price stop at this fair value gap right here. We want to see price stop at this particular fair value gap right here. So one of these areas will be our area of entry to the upside, to this higher objective right here on the dollar pair. You understand? So we could see price trade into this fair value gap, or we could see price drop lower into this particular order block right here. The thing we don't want to see, we don't want to see price come below this point of origin. If price comes below this point of origin, then it has changed the tone of being bullish. It is now bearish. We want to keep seeing bearish moves. You understand? We don't want to see price violate our point of origin. We want to see price respect that point of origin and respect this institutional reference point we have outlined, which is in this case the fair value gap right here, the imbalance in general, and also finally the order block right here at this lowest point of the point of origin, you understand, of this particular swing high. So this impulsive price move higher rather. So we want to see price respects one of these areas. And how are we going to know it is going to respect that areas? If it drops to this fair value gap, there's going to be a quick response in price. You understand? If it drops into this particular order block, which is the end point of this particular imbalance, we want to see a quick response in price higher, just like we saw right here. You understand? And just like we saw right here on when price dropped into this old monthly high here, we saw this impulsive price move higher with this particular candle. So that's the same thing we want to see when price drops into this 4 hours candle, or a 4-hour fair value gap rather, or this 4-hour order block right here. You understand? So if we're expecting higher prices on the dollar index, that means on the foreign pair we want to expect what lower prices. Is that not so? Good. So this is the foreign pair, the pounds. You understand? So just for recap, the sake of recapping, mind you, in that market maker liquidity saga, I said on the foreign pair, like the pounds out, I use the pounds for example. I said I'm expecting the pounds to get into this fair value gap right here, and if it fails to respect this fair value gap, I want to see it come to violate these highs over here. But in this case, we saw that price actually respected this fair value gap, giving it the first touch right here, and there was a quick response in price. But looking at the close of this particular candle on the daily chart, there is indecision in the marketplace. So we're still bullish right here. On a Monday we traded bullish, you understand, and price went higher actually, where to this series of highs over here using the body of the candle. That's a series of high over there. So the price came for those highs over there, and immediately from that point onward we started seeing lower prices. You understand? Creating an order block. You can see an order block right here. The same thing you can also see on the dollar index from the daily chart. This is an order block right here. If I zoom in, you could see it clearly. Let me make it bold. You can see that's an order block. Is an order block right here. You understand? On the dollar index, and that same thing is replicated on the pounds also, where we can see an order block right here, and we can see on the next day when after the order block has been created, which was on a Wednesday, we saw price traded into the order block and showing us a quick response in price lower. And on this day being Thursday, we're seeing price trade into the order block again for the second time. You understand? Mind you, price failed to get to the main threshold of this particular order block, which is where we have this particular red line cutting across right here. You understand? If I zoom that out and measure the measure with this particular rectangle tool, you could see, just hold on, you could see that that's exactly, you see that point right there, the 50 points, these dots right here, that's exactly the mean threshold, which is the 1.22 thousand level. You understand? So price is actually coming for that particular mean threshold with this particular retracement right here. So that's what we're actually waiting for. So we're waiting for price to retrade into that area. So that could be our point of entry. So So let me mark. Okay, it's already marked out in time. But if we drop to the 4 hours, um, that area of value will be right here, just above these highs over here, above this particular high. So this would also be our point of entry, which will also serve as a total soup. You understand? A liquidity run, also known as stop hunt. So we could use a stop hunt on the pounds to actually get an entry. So because the way price is retracing, price wants to retrace into that stop hunt all the way into that particular main threshold from the order block on the daily time frame. And also if you look clearly too, you can also see an order block on the 4 hours, which is right here. So between this order block to this particular swing high over here, this will be our entry. Actually want to see that area being respected. But if price violates this area and comes for this particular high over here, then that means there is no more bearish moves in the foreign pairs. You understand? We want to start continue to seek higher prices. You understand? On the foreign pairs, and that means also the dollar is going to keep going lower. You understand? But in this case, we are still anticipating bearish moves. So when price gets to that level, we want to see a quick response in price, an impulsive price move lower on the foreign pairs when it gets to this particular main threshold. You understand? So this is more like my price projection analysis, me taking you through, you understand, the marketplace, you understand, to be able to guide you to profitability. But I didn't go great in great details. Mind you, this is not signals. You understand? This is not signals. So don't go trading it recklessly without discretion with your live funds. You understand? You want to go into the marketplace and apply discretion. You understand? I love you so much to hurt you. You understand? So I don't want you to go into the marketplace risking your life funds. You know what I say? Going to trade this thing without proper risk management, without waiting for the response in price, without knowing that area of value, because there are a lot of things, you need to know. You understand? That I have not yet uploaded on this channel. You understand? And but with what I've showed you already on this channel, you can actually better time your entries. You understand? So there are a lot of things I've not shown you here. You know what I say? That would also guarantee that area will hold. You understand? So there are a lot of things you still need to know based on microeconomics, on fundamentals, because by 12 today we're actually going to be experiencing the interest rates increase or decrease for the pounds. You understand? And that will actually be the move we're waiting to send price into that area of value. And who knows whether the pounds could look more attractive and also even clear out that particular high. You understand? So there are a lot of things you need to bring into perspective to be able to better time your entry right there. So I don't want you to go into the marketplace. Maybe this video may be uploaded even before that happened, or maybe after it has happened. But I don't want you to go trading this particular move, right? And not trading with discretion. You know what I'm saying? If you want to take this idea, trade it with discretion. You understand? Because I will not be liable for your losses. You understand? So don't allow greed get a foothold on you. You understand? Apply proper risk management. You understand? Take it for just educational purposes only, and trade it as your own discretion. You understand? So I love you guys, and I really appreciate your contributions, your effort to this community on YouTube. So this is the little I can do. So for those of you also asking me for my price projection analysis, what it actually looks like, this is more like what's my price projection analysis looks like. But just that in the price projection analysis, I'll go in greater details, like being with you for a particular period of time. You understand? Telling you, okay, the market has done this is what to expect right now, and the rest you get. But it's also not signals. I don't give signals. You understand? I don't give signals. I don't trade people money except large funds, like from the tone of $1 million and above. That's the only funds I trade. But I don't trade any fund lower than that. You understand? For external or outside investors. You understand? So I don't trade people money, and I don't trade signals also. So please and please don't go into the marketplace trading these ideologies without discretion. You understand? Yes, we're already in a bearish tone on the pounds. Yes, we're already expecting lower prices on the pounds and higher prices on the dollar based on the analysis. You understand? But you want to see some few things align. You know what I'm saying? Like in the terms now, I've shown you some of the things you want to look out for. You want to see price respect this You want to see price respect this particular order block by showing you a quick response in price when it gets to it, or respecting this swing high. So if price takes out this swing high, you want to see price respect it, or even respect the mean threshold of this entire order block. You understand? From the daily time frame, you want to see price actually respect it. So when you see price respect it, in other words, tap into it and show us a quick response lower. Like in terms of this kind of move, you want to see an impulsive move lower, then that signifies, okay, yes, there is institutional sponsorship in the marketplace. You understand? You don't want to go in there and trade this without discretion, without proper risk management. So please and please, please trade at your own discretion. You understand? So what will be our objective and what are we aiming for in price? If we are looking for lower prices on the pounds, so probably these are areas you should target. You target this low right here. These are areas you should target. That low is another area you should target right there. You understand? This is another area you should target. This low right here is another area, and finally this swing low right here also, and this particular, finally this low here. So you have one let me do that again, this particular swing low right here. So if I zoom out, so you have 1, 2, 3, 4, 5. You have 5 areas of targets, you understand, from the daily charts that you can use to use as your targets for lower prices on the pound dollar. You understand? So these are areas you can use for your areas of targets on the pound dollars. You understand? But I'm not saying go in once price retrace into this mean threshold, or this the order block on the 4 hours, or this swing high. I'm not saying go there and hold price all the way to this low. I'm not saying for you to do that. You understand? That may not be your style of trading. You understand? I'm not saying go in and hold your trade all the way from that high, you understand, down to this particular low. That's not what I'm saying, because price could retrace at equilibrium. If you watch that institutional order flow, I outlined that. You understand? Price could retrace at equilibrium and start taking price higher. You understand? Because if you also look, okay, let me not just confuse you, let me just stop here. You understand? Price could retrace at equilibrium. The reason why I don't want to show you what I wanted to show you is because I don't want to create confusions in your mind. You understand? I'm not hiding in anything actually. I just want you to grow progressively. I don't want you to just get confused. You understand? Because my work, or as my goal as a teacher, as a mentor, should be to be able to guide you one step at a time. You understand? So to be able to avoid analysis paralysis. You understand? So that's the reason why I'm going to hold back what I wanted to show you right now. So I don't want some of you going to start commenting, please show us why you're hiding something, all this kind of thing. That would be an insult to me. You understand? I'm actually not hiding anything. What I wanted to show you would have created a paralysis, and once I just remembered it to create a paralysis in your analysis, I just decided to stop. You understand? So I'm not actually hiding anything, and I'm going to reveal that to you later on in subsequent videos. But for now, currently I'm expecting lower prices on the pounds, which is the foreign pairs, and on the dollar index I'm expecting higher prices. Seeing what the price has done on the 4 hours, you understand, I'm expecting higher prices on the dollars. Then the only point where for me this thing is going to be violated is if I see price trade and violate this particular swing high here, this point of origin, and also the point of origin on the dollar. If price violates this point of origin, then the bullish prices on the dollar has been violated, and the bearish prices on the pounds, you understand, has also been violated. Then we want to continue seeking was higher prices on the pounds and lower prices in the dollar. You understand? Until then, we don't know. You understand? We are still anticipating and we are waiting. You understand? So I love you guys and see you guys in the next video. I hope you find value in this video. Hit the like button and subscribe, and also see you in the next video.